Tell us in the chat, Ken.
And we're live.
Welcome to the Halftime Report, presented by Tackle Trading.
Oh, c'est la vie. I will tell you this. If there's one thing that's going to go to the very top of the priority list is you are getting rid of that whistle. I am telling you.
You hate the whistle.
I hate that whistle.
Talk to our producer, Cam.
I
wondered at it.
Welcome out to our halftime show here. Market halftime live on the market, 7/18/2018. Coach Tim Justice here from Tackle Trading. Coach Matt from Tackle Trading as well. Matt, how you doing today?
You know, Tim, doing absolutely fantastic today. Market showing some resilience today. We got a good show planned. We're going to look at the market, look at the EIA numbers for the crude oil. We're going to look at the real estate numbers. Housing data came out today as well. As well as we're going to play a couple games locked in with Dennis Gartman and also locked in on Under Armour, Nike, Amazon, Apple. We're going to do a little rapid fire with the people that are live with us today. So I'm looking forward to it. We're going to have a lot of fun.
Yeah, there's no doubt, and it's an interesting market condition today. There's not a lot going on. I spent like 20 minutes with our team over at Tackle Trading this morning going through the markets, Matt. And then I asked the people watching to explain what they saw. And Hero, who's a great veteran member of our community, said,
absolutely,
the market is blah. And I said, Hero, that's an economy of words right there. You just described in 3 words what I saw in 20 minutes. So great job. But that doesn't mean there's not anything going on out there. There's a lot going on out there today, actually. A very interesting market from my perspective. Just not a lot of action yet. Let's start with the S&P 500 on a chart. Now, this breakout's an interesting one, in many different regards. Number one, you have a little tiny green doji candlestick. On Friday, I was cautious, but mostly just because of the weekend, Matt. Mm-hmm. The green candle from 4 days ago is cautious. The red candle held the breakout. Yesterday, we called that as a very strong breakout. And here we are hitting new highs today. What's your take?
I'm a little concerned for a couple different reasons. Number one, Jerome Powell's testimony today was certainly not as bullish as yesterday. The first day of the Fed chairman's testimony is obviously more important than the second day, but he did say a couple concerning things. One was, and the first thing that concerned me was when he said the fiscal policy of the United States has been on an unsustainable path for quite some time, and it will be in the future as well. And what he's talking about there is the debt implosion that we've really kind of highlighted yesterday with Noah when we're looking at the debtclock.org. And that's something that can put a damper on the growth of the U.S. economy. But overall, the U.S. economy is doing very, very well right now. I am a late stage bull. There's no doubt about that. I am buying this breakout, but I am doing it with a slight degree of caution because there was a little concern coming out of the Fed chairperson, as well as the good market contrarian Dennis Gartman came out today. And Tim, it was interesting what Dennis Gartman said. And Dennis Gartman basically he's infamous for being wrong on the market, basically. And he came out and he gave this little statement where he said that because of the consolidation in the Dow Jones over the course of the first 6.5 months of the year, he is basically, I don't want to say he's expecting, but he did make a case for the Dow literally going to 30,000 points by the end of the year. And that, Tim, is a 25% increase in value, a 20 to 25% increase in value in that time frame. I don't know about that. And that's given me a little bit of concern as well.
Well, we'll have a discussion about that, I'm sure. I mean, the reality is when you see a market breaking out, you've got to believe in strength. You have tax cuts that are way down. You had a market that was depressed for 6 months. So if you've been a bull the entire time and you thought the volatility, let's say that the premise, Matt, is that the volatility in the selling in February and April was garbage, and you didn't believe in it. You thought they were just corrections. And now here we are on our way back up. I can see a very bullish trader saying, hey, we're going to hit new highs by the end of the year. and you're going to see a late
staying new highs by the end of the year is a far cry from saying you're going to increase 20% in the last 5.5 months of the year.
Listen, that doesn't make the headline. New highs doesn't make the headline. 25% makes the headline. So that's one of the reasons why he's going to come out and call a number. And come on, we're all pontificators. We all have to make a call at some point.
Yeah, but when you say stuff like that, you're just trying to get headlines. And that's all you're trying to do. But, I do believe in the bull case right now. I do. The U.S. economy is still showing strength. I'm also concerned about the trade wars and tariffs having an impact on the market. But that's going to take some time, right? And Jerome Powell talked about that today in his testimony, how he said, we haven't seen the impact in the data yet, but this impact of tariffs, that takes a long time to have a real big impact on a $20 trillion economy. And so I am concerned about the debt implosion. I am concerned about the trade tariffs. I'm concerned about Gartman, basically projecting a 20% increase. But those are all long-term situations. From a short-term perspective, I'm looking at a market that has been very resilient right now. I'm looking at a market that is above its previous levels of resistance, that has broken out of 2,800, and that is a buying opportunity. From a technical condition, though, the only question I really have, though, is this slightly overvalued coming into the breakout? And that is something that is a little bit of a concern.
Oh, you're range up. That's not even a debate. You are range up. You've gone far enough to where usually the market's going to slow down and come into a correction zone. But you can't call that bearish, right? See, it's one thing to be cautious. And let me ask everybody out there in the chat, one thing I want to do here today, Matt, is get everybody else's opinion. If you're here watching live, great to see you. Great to have you. Are you currently bull, bear, or neutral on the S&P 500? Let's get everybody's opinion. And Matt, we are pay range up, so.
And as we kind of see people respond there in the chat, when Tim says for pay range up, we're looking at potential average yield. So from here, 2,600 to here at 2,737, you have a 137 point movement. Then from this support level right here at we'll call 2685 to this resistance at 2,800. So 2685, that's a 115 point movement. So in your last two movements that you've had in the S&P before it either stagnated or actually retraced back down, you're looking at an average somewhere around the 126 level, Tim. So here, coming from 127 to currently 2816, you've already moved 115 points up. Plus, look at the RSI here. RSI is now above 80. When we were looking at it back here and calling for this as a buying opportunity off the retracement back down to 2,700, you were looking at the RSI now just starting to show strength up above 50, but now it's up above 80, your pay range up. That's going to give me a little bit of concern. So I am still bullish, there's no doubt about it, but I'm a very cautious bull because of those reasons stated.
You're taking a nap in the shade. You've got the aggression in you, but you're not showing it right now. That cautious bull is what I saw in the chat a few times here. Very common. That's exactly where I am. And that being said, that's where you just rely on your process. There's a reason why we have checklists that we go through the market. So Matt, I'm going to put you on the clock and I want you to go through the VIX crude, gold, the dollar, and Bitcoin. And I want to be efficient going through these.
Well, listen, we're not going to be efficient. We got to talk about the EIA numbers.
No, we will talk about crude in more depth. So, but let's go through them. Let's go through them.
VIX is boring. Nothing to see here. That's all I got to say on the VIX. It's priced to be a buyer in the market, both in terms of buying call options as well as buying put options. So if you know how to do credit trades versus debit trades, you're definitely looking more at a debit perspective today into the very near future as well. Options are priced to buy right now, and they're going to be priced to buy until we start to see any type of movement to the downside. As you can see here, the VIX being at the low point. When the VIX is low, you're a buyer of options. When the VIX starts
beginners,
up, you're a seller of options.
Beginners, that's long call, bull call. Is that right?
Yes.
And veterans and very experienced traders, there's all kinds of combinations you can use.
Yes, but you're doing you're either buying call options in swing trades, or you're doing bull call spreads in swing trades. Or you're buying put options in bearish swing trades, or you're doing bear put spreads from a debit perspective, because once again, they're priced to buy right there. Looking at gold here in terms of /GC, Gold still showing weakness here today, hit that 1220 price mark. There's nothing I'm seeing today that's coming off my projection down at 1200.
Well, here's the thing on
I think
gold.
it's going to hit there.
I will say this, if you're out there and you're listening, hopefully we can use this as a learning opportunity. If you're long gold right now, you're not paying attention. Okay.
And you haven't paid attention for months.
It doesn't mean that it won't go back up. We don't know the future. You have to trade what you see, regardless of your opinion. We've been talking about gold every day in this show for 2 weeks, Matt, and we've been calling it bearish, bear retracement, pivot, trigger, bear breakdown. It's continuing to show weakness. Now it's got a doji down here, but it's been under pressure for a while. And then Bitcoin.
Bitcoin here, and we were talking about this when we went Facebook Live. A lot of that doji candle, both gold and crude oil was showing weakness earlier today, with the dollar showing some strength. The dollar started showing some weakness coming out of Jerome Powell's testimony here. And as the dollar showed some intraday weakness, let me kind of show you the price action here. As the dollar showed some intraday weakness right here, you saw both gold, if you'll look, give me a second, go to GC, you saw gold in that same time frame show some intraday support. But that gold intraday support is coming right back up into this intraday resistance level between 1228 and 1229. I've shown some weakness at the top. I expect gold to come back down throughout the remainder of the day from an intraday perspective. So I'm not buying this doji small range candle. It's a lot of the intraday coming right back into resistance. I'm still showing overall weakness in the trend in gold, and I'm as well. So I'm certainly not a buyer in gold.
You can't go long gold right here until you get some kind of confirmation or trigger. I mean, any kind of position would probably have to be in the direction of the trend or the volatility expectation. I do want you to go back to the dollar though, Matt, because I know that, and you and I may be seeing this one just slightly differently. And I don't think so, but I will give you an opinion. If that thing breaks the resistance, you got to call it bullish. I mean, I know that we're expecting this rotating trend to develop into a head and shoulders and an M pattern, all that kind of stuff. But we got to remember rising interest rates, Fed expectations. Noah was describing his opinion of that the other day. 95.5, Matt, if it broke with some strength, how would you interpret that?
Well, number one, it is a head and shoulders formation still today. But that head and shoulders formation, and like I said a couple of days ago, you can't trade within that head and shoulders formation. You got to wait till it confirms, because this thing could very easily come back up, show a cup and handle type formation, ultimately break out of 95.5. And I think that I still believe the bullish case in the dollar. We're going through a rising interest rate environment. Jerome Powell has been very consistent in saying they're going to continue to raise rates. The dollar is king from a major currency perspective from where interest rates are, which means traders want to buy the dollar to get paid the interest versus the euro, the pound, the CAD, the Japanese yen, even some of those commodity currencies out of Australia. There's no real thirst for that yield outside of the dollar. So I could certainly see the dollar continuing to rise. I still see this as a head and shoulders formation. I think a lot of that was priced in this price movement here. But if the dollar ultimately closes out of 95.5, yeah, you're talking about not a whole lot of resistance levels over the course of the last year. That would be a 52-week high breakout of that level. That's a very positive case for the dollar. And the real only resistance level you really kind of have is somewhere in that 97 to 97.5 range, which is a 2% movement on the dollar, which is a really big movement.
As I think about the dollar here, actually, it's funny how pattern development happens, because we're calling that as we see it. But really, when you write the history books, you see whatever won the day. Matt, if that breaks out of 95.5, you'll be able to draw that as an ascending wedge.
Oh, yeah, absolutely.
Right?
Absolutely.
So one person's head and shoulders is another person's ascending triangle or bull flag. And that's how pattern development.
That's why you don't trade within the pattern. You have to wait for the pattern to come to some degree of conclusion. And when you're in these types of, continuation patterns like high bases, ascending triangles, wedges, flag patterns, cup and handle patterns, or the reversal patterns like the M formation or the head and shoulders formation, regardless of the continuation pattern or the reversal pattern, those patterns are so similar to one another, Tim. It's so similar to one another that, two technicians looking at the exact same chart can make an argument for one way or the other, because when the stock or the commodity or the currency or whatever you're looking at is within the pattern has not been finalized. It's only finalized when your key levels of support are broken, thus confirming the head and shoulders formation, or when resistance is broken out of, thus confirming the potential bullish uptrend.
Look up Bitcoin next, and let's talk about the alternative currency from the fiat currency to the cryptocurrency. Here we are. Bitcoin has had its best 3 days in a long time, Matt. 6,000 to 7,500. You'd had a 1,500 point move in about 3 days. What is that? 25%?
Yeah, about 25%.
There's your maybe Gartman was talking about Bitcoin.
I don't think Gartman likes Bitcoin.
I doubt that he does. Read this from a chart.
Yeah, it's really tough to read from a charting perspective, but if you're just looking at it from a pure technical perspective, you are seeing a little bit of an inverted head and shoulders here. And let me kind of draw for you guys so you can see it. You have your left shoulder over here. You have your head over, you have your head over here. And then you have your right shoulder right there. And then once it breaks out of what's considered the neckline right there on a strong bullish breakout, that's a buying opportunity, no doubt about that. It's now up above its moving averages, both the 20-period moving average and the 50-period moving average for the first time since it kind of broke out of its range here back in April. The question is this a buying opportunity? Well, Jerome Powell would say no, and the hedge fund billionaires who came out said was attacking Bitcoin would say no. But this is something I have seen very, very routinely when Bitcoin shows any degree of strength. When Bitcoin shows strength, you get the haters coming out of the woodworks, and they basically just say, this is horrible, this is horrible, this is horrible, this is horrible. Nobody's going to do it. It's a scam. It's all of that. You start to see those haters come out, and a lot of times that shows a little bit of a price movement to the downside. But you could certainly make the bull case on Bitcoin. I'm not going to do it because of the volatility in Bitcoin is just too much for me. But in terms of this, I could see an argument to be made that Bitcoin is going to continue to appreciate in price. It's just not for me.
You are such a contrarian. You know that? When everybody loved Bitcoin, you hated it. When now that everybody's not paying attention to it, you're starting to get interested. As soon as the hedge fund managers start going after it like crazy, you're going to eventually come back to
Well, I'll eventually come back to Bitcoin. Absolutely. I hated it last year because of the Facebook warriors. They coming out and saying this was going to go to 500,000 in the next 3 years, and how people without any financial education in any capacity was coming out saying this is a life-changing situation. That's when I'm out. It's like when you're handicapping football games, Tim, and you see a bunch of people come out and bet on one team, you usually want to go against that, because usually people usually people who are uneducated are typically wrong.
Let's go on to crude oil, because that's the news of the day here. And Matt, before we go into the actual chart, I want you to look at the economic data so I can frame this. Now, every Wednesday, you have the EIA report on supply and demand, okay? And they kind of talk about the inventory builds, whether they're up or down and whatnot. In the chat in YouTube, type in supply and demand. Let's make sure we're framing this context well. And Patty, it's great to see you. And by the way, I'm loving the comments here, guys. Watching those as we go. It's always good to see what you guys are thinking and watching and needing from an analysis perspective. Crude oil today, Matt, they came out and they put up 5.8 million build in supply when they were forecasting to have a draw in supply. Now, if you have a massive increase in the supply of something, what should the price do?
Increase in supply drives price down.
Okay, you should see the price go down. Now, remember, and this is the importance of knowing how economics does affect markets, but why we always say price action is king, okay? Price action is the most important thing. We'll get to the chart here in a minute. Matt, as you see the economic report, what's your reaction?
Well, obviously, that's the headline in the number, right? You're expecting a drawdown. You didn't. You saw an increase, supply increase. The market should respond down. And the market did initially start coming down. Crude started showing a little bit of strength coming out of the report, especially as Jerome Powell was basically talking about interest rates and so on and so forth. But the report doesn't just show in terms of U.S. crude inventory. It shows net inventory, both in terms of, international as well as domestic. And when you're looking at just that number, the number, what was expected versus what actually came in, you also got to look at last week and what happened last week in the marketplace. So I want to read just a key little bullet points here about kind of what the report was. U.S. crude oil inventory inputs averaged 17.2 million barrels per day during the week ending this past week, which was 413,000 barrels less than the previous. So, Tim, even though we were expecting a decrease and we saw an increase in supply, which usually drives the market back down, you actually saw it 413,000 less per day than you did in the previous weeks, which is a little bit of a bullish argument. U.S. crude oil imports averaged 9.1 million barrels per day last week, and that's just kind of giving you the numbers, up 1.6 million per day from the previous week. U.S. crude oil increased by 5.8 barrels. That's kind of the headline numbers. But the total product supplied over the last 4-week period averaged 20.7 million, which is actually down 0.3% from the numbers from the previous year. So when you're just kind of looking at this overall headline news, when you look at the economic calendar, you're like, well, Matt, the increase in supply, you should see the price come down. But it's kind of like the unemployment report, where the unemployment number gets the headline, but then you have average hourly earnings, you have unemployment claims, you have other things that go into that report as well. And so from an overall perspective, looking at crude, the initial numbers that came out, they came out at 10:30 a.m. Eastern Standard Time. So we're looking at
Go all the way down to a 1-minute chart. I want to show you something I was looking at today. Okay, so when the initial number came out, Matt, find the exact moment. So look at this. Now the headline hit, and then the next candle was a huge red candle. Mm-hmm. So when the market saw the headline, they reacted bearish. Okay.
Yeah. When the number came out,
news drove it down. So that big build in, whatever supply, they thought the price should go down. Economics 101. But then the market didn't continue to sell. And in fact, the very next minute put in a green candle, then another green candle. Within 5 minutes, it was hitting new highs, putting in higher pivot highs, higher pivot lows. And now here we are at the highs of the day.
Well, again, a lot of this is done through the algorithm, right? Through the algo traders, the high frequency traders, and so on and so forth. That number gets put into their systems, and the number just has the reaction. But then you have a little bit of time to look at the other numbers, and the market kind of takes over, and you start to see some appreciation going on. So, for me, the initial reaction is not the most important reaction. The initial reaction just kind of shows you the algorithms. It's that secondary reaction that you're looking at. And if I look at this from a 5-minute chart perspective, you see that 1-minute chart come down. But once you started seeing the report, you saw this nice little trend start to develop. You have intraday support here at 67.30 with intraday resistance at 67.55. I expect this to continue to go up. The only question that I have is this a buying opportunity, Tim?
No, not from a swing or position trade perspective. Now, day traders had opportunities today. They still do, by the way. If you know how to day trade, playing those higher pivot highs and higher pivot lows after the news, Matt, that's something crude oil traders do every week. But if you're not a day trader, the swing trader does not have confirmation yet. Mm-hmm. Period. I mean, that's what it is.
But like I was talking about yesterday and the day before, as crude was coming down here, I said, I'm still looking at a potential buying opportunity here, very similar to what you kind of saw down here. But you got to see it slow down first. That's kind of what it's happening right now. It's starting to slow down. I expect that upward movement in price. But if I don't get it, I'm not going to trade it. I absolutely need confirmation here. There's no doubt about that. Confirmation is a close above the previous day's high. So I don't expect crude oil to confirm today because the previous day's high is all the way up here at 68.31. So for this to actually show some degree of confirmation, dropping it down to a 15-minute chart here, crude has to go all the way back up above these levels right here, which means you would have to have a huge price movement. And I just don't see that occurring.
In the chat, somebody type in 68.50 trigger confirmation so that we make sure that we're understanding what Matt's talking about here and putting a number down. Okay. 6850 trigger confirmation. That would be your first location. That'd be above the high of the previous day. Now, Matt, that trigger confirmation could change as we develop through the week. We'll revisit this one again tomorrow. Guys, time to look at some stocks. You know, there are 4 stocks that I want to focus on here today, but if you're out there watching
stocks, Tim.
Yep, go ahead.
The one thing we have to also talk about here from an economic perspective is you also had some very important economic reports that came out: building permits, housing starts. Now, in the chat, how many of the people in the chat right now invest in real estate, trade real estate in any capacity? Just a yes or no would be absolutely fantastic. These reports, if you invest in real estate or if you trade real estate in the financial world, these reports are very, very important. Building permits, housing starts, these reports both underperform today. Now, when the reports underperform, looking at the XLRE, this is the net real estate ETF. You can see the sector spider real estate. For me, you saw exactly what should have happened. The report came out, it was a negative, it underperformed, the market came down in price. But Tim, what I'm looking at here, though, is I'm looking at a very, very solid trend here. Higher high, higher low, higher high, higher low, higher high, and look where it's coming down into. And I'm going to make a case for real estate right now. Now, obviously, this would have to confirm and slow down on everything we just talked about with crude, but you're coming right back into an old established resistance level at 3230. It's approaching that level right there. You're smack dab in the middle of 2 rising moving averages, which is also a bull case as well. And I know you don't love it, Tim, but I am going to draw some Fibonacci numbers. And I'm going to draw the Fibonacci here from the low to the high. And that's smack dab at a 50% retracement from a Fibonacci perspective too. That is a very strong case despite the negative response to the numbers today from a building permit as well as a housing data perspective. That's a bull case for a potential buying opportunity. Once again, what I would personally need a narrow body candle tomorrow, followed by an upward confirmation in price. But that's certainly on my watch list over the next few days.
Well, let me ask you a question. Would you rather play the ETF here, XLRE, or some of the individual components? You know, you can go rapid fire through here, Matt. I've got the top 5 holdings by index weight. Mm-hmm. AMT is one. Okay. SPG.
Okay.
CCI.
Okay.
EQIX.
Okay.
PLD.
Okay.
And WY. We'll go through all 10.
Okay.
Okay, that's not a good one right there. DLR. Yeah. AVB.
Okay.
And EQR.
You know, in looking at every single one of these, you're either coming into earnings or you're coming out of earnings, number one. From a technical perspective, there was a couple there that kind of stood out a little bit, but I didn't see anything that was great. Nothing that would get me off taking the earnings out of the equation. Just looking at this trend from a sector spider perspective is far better than any stock I just looked at.
Well, and here's the thing. The ETF version has the balance of all of them in it. For an IRA and for most traders, I actually agree with you on this one. I would take the ETF, you know.
There's nothing. You take the volatility out of it is what you do.
And if you're playing it as a swing trade directionally, Matt, that's a much smoother chart.
Oh, there's no question this is a much smoother chart than anything we were looking at from those individual components. So when I'm looking at this, if I can take the earnings out of the equation, if I can take the uncertainty of trading one stock out of the equation, and I have an ETF that tracks all of them and it's looking much better, I'd much rather do the ETF versus the individual components.
One pro tip I'm going to give you guys out there, if you ever want to look up what's going on in an ETF, just type in the word holdings with the ETF name in a Google search and you can find them. So type in the word holdings, okay? And then you can always find the composition of the ETF. Very good analysis here, Matt. I love it. Let's go on to some of these individual companies. Now, if you're out there and you're thinking, you know, guys, I want you to look at my stock today. Yeah, we can do that. We'll do that in a few minutes. The first one I want to do is look at some that we handpicked, though, Matt, that are based on the news today. I want to look at Berkshire, Morgan Stanley, Google, Netflix, and E-Trade. Berkshire Hathaway is Warren Buffett's company, like everybody knows, and it is skyrocketing today. Matt, the news was basically a stock buyback initiative where Buffett came out and said he's willing to buy equity, and the market liked it. They liked it. They shot it up the chart. It's got a big green candle. What do you think about that?
I'll tell you, the bears didn't like it. I'll tell you that.
No.
This trend over the last 3-4 months has been very consistent on the bear side of the downtrend. In fact, if you just look at this, if you take this candle out of the equation and you look at this from a swing trading perspective, you take Berkshire out of it, that's a prototypical bearish retracement with confirmation yesterday. So if you're looking to short on that downward movement in Berkshire yesterday, you're not very happy with the stock buyback program announced today. But we have seen this a lot with major companies over the last 5, 6, 7 years, where if anytime they start to struggle at all, they come out with stock buyback programs. That's what happened today. Big, huge rally, up over 5%, up over $10 today on price action. It gapped and then ran. The gap and then running like it did, that is a very positive movement in Berkshire. Could certainly reverse what we have been seeing in this short-term downtrend. The only concern I have in any capacity with the buying of Berkshire here is where it kind of came into right here. It gapped and ran right into the old level of resistance. I would like to see that actually break out of that level of resistance. It's a positive that it's above 200, but you got this overhead resistance right around 202. If it breaks out and runs, it can certainly get to 212.
So let me ask the audience out there, buy, sell, or pass on Berkshire? Do you play that big gap out, big green candle? Do you see Buffett's news as strength and something you can work with, or do you kind of wait for it to backfill here?
The candle's not going to double today, Tim.
No. See, to me, it's a pass at this point in the day. There's no doubt about it, man. But if you got a second candle to confirm tomorrow, that could be trigger confirmation as well.
Yeah, it's you don't want to buy after, you don't want to be the last one to buy, because if you're the last one to buy today, you're the first one to lose. I love Berkshire as well, Adi. It's an absolutely fantastic stock, no doubt about that. But I would like to see it slow down and then break out. That's what I'd like to see.
Either a backfill or a breakout from here. By the way, if you're watching our show right now, go ahead and click that thumbs up button and like it. And let's get some likes on this thing so people can
get the likes.
I love it. Yeah, for sure. I wish there was a love button on YouTube. Let's go on to the next one, Morgan Stanley, Matt. Morgan Stanley earnings. Now, whenever you see a red button on there, like Pavlov's dog, I want you to highlight it. There's an earnings report down on the bottom. 1.3 was the expectation, but this one is a really ugly chart from many different regards. You drew the downtrend line, the falling 20, 50-day moving averages. How do you interpret that gap right there?
You know, they obviously beat earnings, gapped up, but here I just think the bears are just really happy right now. Even though with the gap up, if you're looking to short Morgan Stanley, it gaps right into your historical trend line. I did a video that's going to be posted on the YouTube channel for Tackle very, very soon on how to draw trend lines. But here, all you're doing when drawing trend lines is you're just connecting your resistance levels. That gap's right into that resistance level, showed weakness coming right after it. Mm-hmm. If you look at kind of that zone here, Tim, that's that's the resistance trend I was showing you. It gaps up into that, consolidates, start to coming back down in price a little bit. I don't think you can make a bull case on Morgan Stanley at this point because it's still bearish, in my opinion, despite the positive news on the earnings. And you know what? A lot of the price movement coming into it was positive based on all of the financial sector reporting fairly decent earnings numbers. But I'm still concerned about this downward movement trend line. I think this is a selling opportunity more than a buying one.
Oh, but I will say this. I've been impressed with the bank's reaction to their earnings so far.
Very much so.
And mostly have been positive and shown some strength. They're beating expectations. I know they always do that, but it's not a bad sign for this earnings season, guys. You know, financials have been leading the way. We've gotten through a lot of the financials, Goldman Sachs, JP Morgan, Bank of America, Morgan Stanley here. Matt, this may be kind of pointing us towards where the market is, and that might be where the opinion of people like Gartman's coming from. They're looking at strength in the financials on the first week of earnings, and we're going up, 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 up. And most of the bigger companies have done really, really well.
Mhm.
Go back to tackle trading on a heat map. I'll show you. There's a filter called earnings day performance that I really like. And as you're going through earnings season, what you can do, and did I freeze you out here?
I don't know. I'm here.
Possibly, as that comes up. But what you can do is you can measure the actual reaction of the stock prices. You know, you can look up PE ratios, you can look up all kinds of stuff. You got to be impressed with this week on the performance, Matt. I mean, financials.
I mean, financials are certainly leading the way. You're seeing financials. We're looking at the ETF XLF right now. Financials have been showing a lot of strength right now. But Tim, you're again, from a technical perspective, you're showing strength, and that's a positive sign. But look at the RSI, and this is just what I'm concerned about. You know, I mean, I try to take the opinion out of the equation. I try to focus on charts here. You got to love the price movement over the first couple of weeks of the earnings season with the financials. They've all beaten estimates. They've all had positive responses to earnings. But now you're all driving up into key levels of resistance, and you're overvalued on the short-term price movement. So from a short-term perspective, I'm not going to chase that. I'm not going to chase the dragon. I'm going to let the dragon come back down to me and reassess.
Yeah. But I think it does give me information about the broader markets. And when I see a doji on the breakout in the S&P, I'm still getting some other context that might give me the confidence to still go cautiously bullish, right? You know, and you have to trade what you see. Interesting on the financials. I want you to go on to, and let's look at Netflix. We actually did this one yesterday, and it is really catering right at that 380 level, Matt. Little red doji after a big gap fill into old support. Do you take this as a bearish play today? Do you play it bearish at all? This is going to be a high opinion based stock. What's your take?
It's completely emotionally driven right now, and that's why the technicals aren't as important, because of the emotion behind this price movement. I watched this the entire day yesterday, just kind of go up, 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 up. And I remember talking yesterday during the halftime report. It was right here between this 380 and 390 mark. And I said that to me is a complete overreaction. You know, the mindset that you were seeing coming out of the news with Netflix saying, oh, it's an overreaction. Netflix never misses twice, buy the dip type mentality. I thought that was a complete and utter overreaction. I expect it to kind of smooth out here for the next couple of days and then reassess. But right now, I think it's a coin flip one way or the other.
By the way, if you've got a really cool movie or show that you've seen on Netflix recently, let me know. I'm looking for something new. I will tell you, Matt, I don't know if you've seen that Parts Unknown by Bourdain. Mm-hmm. It's his TV show. It's on Netflix. It's fantastic. And I think it's only going to be on there for about a month or so. So I would check that out before they take it down. In terms of trading it, you know, trigger confirmation and you don't do anything else, right?
I think it's a mistake to trade this one way or the other right now. I could probably be sold on some type of bi-directional trade, such as a straddle, perhaps. Mm-hmm. But you know, something bi-directional. I think going directional on Netflix right now, when it's so opinion-based, you know, I think it would probably be a mistake.
Yeah, I agree with that. And let's look at Google. They had a $5 billion fine. 15 years ago, Google almost got bought out by $5 billion by Yahoo. And then here today, they're paying a $5 billion fine in cash and don't even care.
One of the reasons why Yahoo is not Yahoo is they both had the opportunity. Yahoo had both the opportunity to buy Facebook and Google. And they said, and I believe they had a chance to buy Netflix at one point. And they said, no. But they did buy Broadcast in 1998. That was probably a mistake by Yahoo. The $5 billion fine was obviously the headline, Tim, but Google's going to appeal that. What I'm looking at here, though, is, and I love this, Google breaking out of a 52-week high, showing strength coming into it. It is overvalued coming into the breakout. That's always a concern. But I do like that breakout. And again, showing resilience against negative news is a positive sign.
Got earnings here in a couple of days. You know, obviously you got to pay attention to that. A so-called negative news headline, and I can't count the number of times I've had this conversation with a student, with a trader. I thought it was a negative story. Why didn't the price go down? Market doesn't care. Market cares about data.
Market doesn't care what you think.
Don't assume that the opinion of a news, story is going to drive the market every time. See the headline, realize it can trigger something, but trade the price action for sure. One more I want to look at, Matt, is E-Trade Financial, which we're going to prep tomorrow. Just if you are a trader of the Tackle 25, I love this candle here today, and earnings strength. We'll be prepping that one tomorrow for an earnings play. Did I miss any here, Matt, that we had discussed?
No, we were going to talk Amazon and Prime Day, but that was just for me to complain about consumers having Christmas in July.
Yeah. Well, I've always said this. Amazon's the most important company on the NASDAQ right now. I will tell you this. Actually, I had a thought today because I saw a headline that Amazon hit $9 billion in market cap. I want you to go into the Analyze tab in the fundamentals and look at Amazon. I'll show you a couple of things. And then fundamentals on the far right, that tab. Yep, very good. The market capitalization for Amazon, I believe, is $900 billion. It's been going crazy, obviously. Apple Computer, come down and find the exact number in market cap. Let's get an exact data point. Valuation, market capitalization. Okay, that's per common share. Keep 892 right there. So it's almost 900 billion. Now put in Apple. Apple is 934 billion. Okay, so we've never had a $1 trillion company in the history of the world. Never happened.
There was a $1 trillion company it was an energy company, oil company out of China, but a lot of people dispute how much value it really had.
How big's Aramco out of the Middle East?
We don't know.
I don't know. Yeah. And based on inflation, we don't know how big the Dutch East India Trading Company would have been based on today's market cap. I mean,
but in the U.S. markets, we've never had a $1 trillion market.
Right. So here we are, Apple or Amazon. Which one's getting to that 1T first, Matt?
Let's ask our listeners out there. Let's play Would You Rather. You guys know the game Would You Rather, okay? Or what's more likely? Excuse me. What's more likely? Amazon hits $1 trillion first, or Apple? You guys tell us. Amazon or Apple?
From a percentage perspective, Amazon has to go up more. Mm-hmm. They have to go up about, what is it? $110 billion in market cap means they need to gain about 12% from the current price. Apple needs to gain about 8%. So Apple would have to go to, let me think here, 16, 20 points or so, about $210 on the stock price, Matt. I'm just estimating on that.
Yeah.
And Amazon would have to go a little bit further than that. So Apple, right at that location, okay, 210, or Amazon would need to rise 15%. So 10 is 180, about 2,200. Yep.
So what do you think?
So
what's more likely?
Well, the trend is your friend. I think Amazon is such an unstoppable machine right now from that perspective. If the market stays bullish, it's Amazon. It's outpacing Apple. Mm-hmm. If the market has a correction that has to make a recovery, it will be Apple. It's a complicated question because it depends on what you see the market doing. See, in a market sell-off, if even that pay range fails on the S&P, Matt, Amazon would come back further and then need even further to go to get up that chart. If you had to pin me down, market right now is bullish. Market's in an uptrend. I would probably answer Amazon.
The market loves Amazon right now. It's the bellwether. It's Rocky. It's Mount Rushmore. It's George Washington. It's the best out there, right? If I had to pick one way or the other, if you put a gun to my head and said, Matt, you got to pick one or the other, man, I think it's close to a coin flip, to be honest with you. But this trend is stronger. The relative strength is stronger on Amazon. Just the emotion behind these two companies is stronger on Amazon. Amazon has more growth in front of it than Apple does. Apple's a little more consistent. I would have to say Amazon too. I think it's more likely that Amazon drives 15% than Apple drives 10.
I want you to think about something right now. In the last year, Amazon has built $450 billion in market cap.
It's amazing.
I mean, I don't know the GDP of every country, but I could bet we could go look it up, and that's probably bigger than most countries. Okay.
It's amazing.
Pretty incredible. All right, guys, I think we were going to do one more Would You Rather, Matt.
Well, we were going to do locked in on Gartman's projection of 20%, and then locked in on Under Armour or Nike. But let's do the Gartman projection. I think that's more entertaining today. Now, once again, guys, for those of you listening, Dennis Gartman came out and made the case for the Dow Jones, which is currently at 25,174. He made the case that because of the consolidation of the first 6.5 months, okay? And when you're looking at that consolidation in the first 6.5 months, he made the case that because of the consolidation and the relative weakness in the Dow Jones versus some of the other indexes, you have this nice little symmetrical triangle type situation kind of forming here on the Dow Jones. He made the case that in the next 5.5 months, that the Dow has the potential to get up into 30,000, which would be about a 20% increase in that next 5.5 months. So let's play. Let's play what's more likely. What's more likely, Tim? That the Dow goes to 30,000, an increase in 5,000 points, or the Dow goes to 20,000, a decrease in 5,000 points over the next 5.5 months. Okay.
Back it out and let me look at a bigger picture. I like the weekly chart, but let me look at yeah, very good. Draw me a box at 20,000.
So basically your projections are, and everybody, you tell me 20,000 or 30,000.
I'm locked in. I know my answer.
Okay. 20,000, everybody in the chat, 20,000 or 30,000 over the next 5.5 months. If you had to pick one. Okay. Let's give him a second. All right. So Linda says increase. Okay, everybody go out and type in 20,000 or 30,000. Tim, you're locked in. All right. Make your case for the bull side. I already know you're going to do it.
Well, the market goes up more often than it goes down. Matt, I am very cautious about the fundamentals of the market. I talk about it all the time, but I'm also a veteran at doing this. I realize that my opinion means nothing. It doesn't matter that I'm concerned about a 9-year bull run and a bubble and cycles and all that kind of stuff. And I know it's all artificially manipulated and all that type of thing. Market's in an uptrend showing strength, and the industrials have lagged. You know, we've had leadership from the Russell small caps and leadership from technology, which is usually an indicator of the broad market following and catching up at some point. Tax breaks have obviously made earnings strong. The financials this week have been very, very strong. We're at 25,000 on the market. If I have to pick either the top line or the bottom line, I'm going to pick the top line. It's in an uptrend. Okay. Now, do I think it's going to happen in 6 months? I think that's crazy to even try to figure that part out. Who knows? I have no idea. Well, but I'm picking the top line. I'm picking that top line.
For that to happen, I could not even evaluate the amount of economic activity, international geopolitical situations that would all have to be positive for that $30,000 to get hit. You would have to have the trade war stop. You would have to have the central bank come off their gradual rising interest rates. You would have to have GDP outperform. You would have to have unemployment go down, inflation go up. You would have to have a perfect storm of economic and geopolitical activities for the Dow to hit 30,000 over the course of the next 5.5 months. And because there is no scenario from an economic perspective that I see that occurring in the current geopolitical environment that we currently live in, I just can't make that case. But I can make a case. Now, mind you, Tim, I don't think either one of these are likely, right? But I do believe that the most likely of those two choices, the most likely would be 20,000, because I can point to about 10 to 15 different scenarios that could play out in the next 5.5 months that could spark a bear market. And once that bear market sets in, people don't remember what happened in September and October of 2008. It took 1 month for the S&P 500 to decrease by 30%, Tim. 1 month. Bears are faster than bulls. Fear is a stronger emotion than greed. Now, again, I'm not projecting one way or the other. I'm a late stage bull right now, but I could see scenarios play out, especially from an interest rate perspective, a geopolitical perspective, or a trade war perspective that causes this to start showing a decrease in value. And if you start to see that and the bears start taking hold, Think about this just over the course of this year. Earlier this year in February, we went from 26 all the way down to 23. That was a 3,000 point movement in 1 month. And that was before we decided to start increasing trade wars and tariffs and so on and so forth. So because of that, oh, and Patty, great point. The midterms create so much uncertainty out there as well from a political perspective. All you have to do, there's gas on this market, ladies and gentlemen. All you got to do is light the match. And so if that match is lit in the next 6 months, I definitely see a 20% decline more likely than a 20% increase.
By the way, if you ever want to know who Dennis Gartman is, just go to Twitter. And one of my favorite things is whenever Gartman comes out and gives a prediction, all the haters come out.
They do.
He is a polarizing figure, and for most active veteran traders, it becomes a funny thing.
It's comical at this point.
Yeah.
You get to the point with Gartman and some of the other ones that are widely followed, where it's contrarian because Wall Street just punishes them. But it's kind of funny.
Recession watch, Matt, I would say there's only probably about a 10% shot we hit that 20,000, but it's there. The reality is the bulls take the stairs, the bears take the elevator. You're right from a probability perspective in terms of which one can happen faster. Yeah, but that's all.
Listen, if you're giving me a 10% probability of it going down to 20,000, I'll give you less than a 1% probability it goes to 30,000 in that time frame.
Rapid fire. We're going to take 5 stocks. Put a stock name in the chat that you want us to look at, guys. We're going to have some fun here. I want to look at your companies.
For those of you who are new to rapid fire, you're putting into things. Basically, we're going to analyze from a technical perspective the stocks that you have, and we're going to take out the economics, the fundamentals. We're going to take out the opinion. We're going to focus primarily solely on the chart. So go ahead and list us out some stocks so we can analyze them for you.
All right. And First Solar.
First Solar was my second trade I ever made, Tim.
All right. You want to take the first one or me?
Micron, First Solar.
ALGN, Boeing, Biogen, Bank of America.
We can do 6. We'll go through the first 6.
That's good.
Okay. So Tim, you do First Solar.
That's a low base pattern in a consolidation. You've got support at 50, resistance at 55, earnings coming up in about a week. This would be a very interesting bi-directional trade. In fact, Matt, give me that earnings day. I'm gonna put that on my watch list. 726.
First Solar can move too.
That would be an inverted fly candidate on the 26th. So why don't we hold that one for a future show and come back to it? I like the bi-directional nature of that. Let's go to Micron.
Micron is in our brother Mark. He loves trading this company. I still remember when.
Well, he stopped crowing about it.
Well, he stopped crowing because it probably came back down. But in terms of this, he nailed this bottom though. He nailed that bottom on Micron, and I was like, I don't know what you're looking at. It, like literally, he calls me up. He says, I don't know what you're. He says, dude, you got to buy this. And I'm like, Mark, it just broke support. It's slowing down a little bit. He's like, I know this company. That's all he said. I know this company. And lo and behold, the 30% increase over the course of the next month. But that's not what's happening right here. It's showing a lot of mixed signals on Micron. I'm looking at potentially a technical pattern called a symmetrical triangle pattern, where you're seeing an increase in support followed by a decrease in resistance. You're currently sitting at that resistance area here. I think it's going to consolidate and then one way or the other play that breakout.
Okay, Allergen. Woo. High base breakout into earnings. I don't know if you have enough time to swing trade that. That's tough.
No,
725. Well, you got 7 days, Matt. You could probably do a pretty sharp, quick swing trade.
Maybe.
Yeah,
maybe.
That would be like a 1 ATR target, half an ATR stop, something pretty tight. You're
I'll
really
tell you though,
pinched.
I'll tell you, I like breakouts like this. Strong bullish movement, retrace back down into rising moving averages. That earnings is a little tight. There's no doubt about that. I don't think you have time for a swing trade, especially with the doji candle today. But from a pure technical perspective, take earnings out of it. Those are technical setups that I really like.
Absolutely.
Next, me on Boeing. Boeing tackle 25 stock doing absolutely nothing. It's boring. It's boring. It's boring. It's a cash flow stock, dividend paying stock. You have earnings coming up on 725. If you're doing covered calls on that, it is one of those stocks that is probably important to assess the market maker move and whether or not you need to buy insurance on that. Boeing has shown weakness this year versus the last couple of years. I'm a little concerned about that from a longer term perspective, but from a short term, I'm not seeing anything to trade there. Biogen, Tim, you get all the biotech stocks today, buddy.
For sure. I mean, earnings coming up. This is going to be a broken record this entire month and forever, by the way. Traders always look for earnings, okay? I loved the gap out. We talked about a backfill. That 340 trigger pivot was a trading opportunity, Matt. It's now gotten to the point where it's going to be an earnings play, and same with a lot of these companies, but I'd be looking at something priced in for earnings. I would not trade this short vol. I would probably trade this bi-directional as well. We'll have to look at the numbers as we get a little bit closer. Bank of America.
BAC, Bank of America, another tackle 25 stock. My analysis on Bank of America is similar to my analysis on Morgan Stanley earlier today. However, you do have one key difference. You're showing strength coming out of the earnings. And if you draw that trend line right there, let me try to draw that a little closer, a little tighter so we can show it. So if you're looking at this trend line right here on connecting the tops here, you actually got up above that on the earnings announcement. I'm taking that as a very positive sign. You're up above your key levels of resistance, meaning the 20 period, the 50 period, you're above your trend line. The only historical resistance you really kind of have is up here about 31, but I definitely see that as a buying opportunity. Maybe not from a swing trade, but from a position trade or an investment perspective.
KSS.
Last one, Tim, take it.
Oh, wow. Interesting. Old resistance, new support, 3 green candles into a compression. You've got a complicated chart here from one perspective. You got 2 different patterns developing, Matt. You have a downward compression range on the short term, downtrend with a lower pivot high, lower pivot low from the month of June going on. But from a long-term perspective, you've got a good demand zone coming in here at 68. I like the pivot. I don't see that until it triggers above that old support point, 72-ish right there, Matt, is what I would say.
I honestly, Tim, you can make a case one way or the other, right? The first thing that came to my head as you said compression was I looked at volatility being at the low point. I looked at earnings coming up here on 8/21, which is more than a month away from now. And I immediately thought, you know what? Straddle this.
Straddle it. Yeah.
That's what I immediately thought was a straddle, taking both sides of the equation here, creating a nice little V-shaped risk graph. We should expect to see volatility continue to drive up. And let me pull up volatility here. As you can see, I'm actually getting excited about this one. Look at volatility as it comes up before earnings. Look at volatility as it comes up before earnings. Volatility moving up before earnings. Volatility still's got a month before. I'm expecting volatility to rise back up, maybe somewhere around a 30% increase in volatility from 34 to 50. So a 15-point movement on the implied volatility. I'm looking for a 15-point implied volatility movement, which will increase the value of the options. I'm also looking because of the compression, a little bit of a symmetrical triangle formation. You might see movement coming fairly aggressively one way or the other, which would have that straddle trade as well. I thought from the very second you pulled up this chart, I started thinking straddle, and it makes sense.
Throw my buddy Adi a bone. Let's do one more. ULTA.
ULTA.
Ooh. M for murder, ID. That is a lot of resistance right there at 260 and some pretty nasty red candles. I don't really trade these directionally when I see a topping pattern because it's not confirmation of bearishness. You've got a neutral trend coming back into the middle of the range. You know what that could be a really good candidate for, ID, is an iron condor. Once you come back into the center here of this range, I would probably price that and look at it on the spreadsheet and see how they come up. And Noah knows this stock because he's got teenage daughters. He just said,
so do I.
Rumors of an acquisition by Amazon. That's going to put a red flag for it on me, Noah, and probably very, very cautious. Obviously, we'd have to do some research on that. Guys, Matt, drop that screen. Let's go back and say goodbye to our team here. By the way, tonight, 7 p.m. Eastern Standard Time, we have a mastermind group on the cash flow condors. Now, what I would always recommend is start your day in the trade center so you can plan your shows. The cash flow condor system is a complete trading system, and I'm going to be there with Coach Tyler Craig, and we're going to talk about hedging strategies. I've seen some mistakes by our traders recently, Matt, with not enough tools on how to hedge that strategy.
They're doubling down when they shouldn't.
Yep. If you want to learn how to trade a very dynamic strategy, 10 tonight there for the Cash Flow Condors group, go to the Trade Center, find the calendar, find the report, and then you can launch that. We don't do that on YouTube. We do that in our private rooms in Zoom with our pro community. Matt, pitch tackle trading here a little bit. That's why we're here.
Guys, this is a tackle trading halftime report. Many of you that are following us on YouTube are already members of our community, and it's a wonderful trading community. We like to call each other our team. We're the #tackle team. So I want you guys to go to Twitter today. If you enjoyed the show today, if you enjoyed tackle trading, just go out there and just #tackle trading. Let's go build this halftime report and get other people coming out to tackle trading as well. Guys, if you want to be a part of tackle trading and you don't really know and you want to learn how to trade and invest and want to know more about what we're talking about, you can come over here and start a 15-day free trial version. You don't even have to put a credit card in place. If you like it after those 15 days, at that point, then you can become a member of our pro teams. And I believe it's $97 a month. So a very cheap way to get access to all of our community, all of our webinars, all of our, investing courses like the Tech 101, Options 101, and other 101 courses out there. Also, if you want to sign up for the Tackle Today email, you can do that right here by signing up for free there as well. And that will send you a daily email called the Tackle Today. And that's basically will list out the video of the day, the thought of the day, any webinars we're doing that day, any blogs we posted, just to make sure that you're keeping up to speed with tackle trading as well.
In Adi's right here, we are family. Everybody in the chat say go team, because that's why we're here. We're doing this. Obviously you guys know us well and we love doing this. If you enjoy this video and you think our community is something that's very valuable to you, share it, send it out to somebody. Let somebody know in your life, hey, these guys, this community, this team, they're there to help us, and we've gone through this process. If you need anything individually, reach out to us. There's no doubt about it. We are done here today. Matt, great show. Great job. Really enjoyed it.
Yeah, great show, Tim. Hey, guys, thanks for everything. If you like the video, if you like the halftime report, always give us a nice little thumbs up there in YouTube. And we'll see you tomorrow, guys.